Hi, this is Zach from Zach's Traders Cafe with a look at some single stocks on Thursday the 28th of July. Starting off with Barrett Developments, and it looks like we've got a reasonable turnaround formation here, effectively an inverted head and shoulders, breaking that neckline there, which was early July resistance at 427. While above the 20-day moving average at 399 pence, that's the grey line there, the target here. Notionally up to 485 pence, which is the 50-day moving average. That's also the area of the bottom of this June gap as well, so the shares should make a move back towards that zone. Boohoo.com has been a great recovery situation over the course of this year. In fact, the rise here is so persistent and consistent, it's actually not that easy to come up with a fresh target here, but we're looking at something towards the 75 pence level at the moment, and that's valid while there's no breakback below the 10-day moving average at 62 pence, so there could still be a little bit more on the upside even though the shares are overbought. Brammer, not a stock which probably many of us look at on a regular basis, but looks as though the market caught a bit short here after that massive gap to the downside in the wake of the Brexit vote. The view here is that at least while there's no breakback below the early resistance of this week at 88 pence, one should look for further upside. That could be as great as the 50-day moving average at £1.34 currently, which would also be an attempt to fill the gap, that last month's gap that we've seen. RSI at just 53, so still early days as far as the momentum here is concerned, and we could see some decent upside over the next few weeks. Especially while 88 pence on the floor of this gap remain as support. Now another stock which is not perhaps always on the watch list, but Morgan Advanced Materials, looking very interesting indeed after this effectively inverted head and shoulders breakout. We've broken through the neckline resistance at 270 rather, and while above that we could see some decent upside here. Favoured destination at this point towards the 325 pence level, which would be the top of this rising trend channel from April. And as I said, with a good turnaround over the last few sessions, that could be hit as soon as the next 2 to 4 weeks. Another stock which is a bit of a second line quiet situation coming up in the form of Quartix Holdings. Here, exhaustion gap recovery here above the 200-day moving average at 304 for the end of June, and since then we've effectively been trading at or just above the 10-day moving average. A big or a decent trend over the last few months, and the view here really is that while there's no breakback below the 10-day moving average at 354 pence, the upside here could be as great as £4.50 over the next 1 to 2 months. Back to the real estate house building area with Taylor Wimpey, and the situation here is that we've been trying to work out whether this is a continuation move on the downside or not after the breakdown in June. At the moment, with yesterday's gap to the upside through the 10-day moving average, probably worth giving the shares the benefit of the doubt, while above the 10-day line at 148 pence. The upside here could be the 50-day average at 165 pence, especially with the RSI rebound on the neutral 50 level. So that does suggest there is some positive momentum, at least to take the shares back to what was formerly their 2016 support area. Finishing off with YouGov, and here you can see a nice little breakout through the 50-day moving average at 174 pence after the recovery from April. Also worth noting that the shares have been above the 200-day line, the black line of 151 for much of the year, which is usually a positive indication. So therefore above the 50-day moving average now, looking for a target up to 200 pence, which is the top of this rising April price channel. That's it from me. More updates at the same time tomorrow.